Hi everyone, this is Pete. Welcome to today's session. Okay, so today we're going to continue on the topic of blockchain and cryptocurrency. Okay, and the previous session that I did with you guys, right? And when I did the Ask Me Any Question session with everyone, it was a very I didn't expect the response to be so big, to be very honest, right? So once again, guys, so today because of the warm response, I promise you guys I will bring on an expert. Okay, and this time around the expert is not me. I'm not an expert in cryptocurrency and blockchain. I'm still learning a lot. But guess what, guys? When you want to learn something new, okay, always look for people who are already in the field, who are practicing it. Okay, like I always say this, I only learn from practitioner. Okay, the more they practice, the better it is. Okay, so guys, right now, if you can hear me, all right, let me change that. Right now, if you can hear me, guys, can you type in yes? Just do a quick sound check. All right, guys, if you can hear me, almost 100 of you can hear me, type in yes. Okay. All right. Oh, Patricia, thank you so much. All right. Yes. Tomorrow will be my birthday. I'm gonna spend some time with my family. So if you guys don't hear from me on social media, on Facebook or anything, don't worry. I'm still around. I did not go anywhere. Okay. Okay. Right. Okay, awesome. Everyone can hear me. So, guys, once again, right, who was at my Ask Me Anything session, which was done in early August? Can you type in AMA? All right, those who were with me in early August, can you type in AMA? I want to see how many of you, all right? And during the AMA, there were a lot of great questions. Questions like, Pete, actually, what is Bitcoin? or some people say, Pete, I understand what Bitcoin is something to do with blockchain. But Pete, what is a blockchain? And then comes the very interesting question. So Pete, what's the difference between blockchain and cryptocurrency? All right. So today I brought on a very special guest. All right. And to really share with you guys what exactly this whole blockchain cryptocurrency thing is about. Now, to be very honest, this session I took so much effort, right, to bring him on because he's a busy guy, and it's hard to convince people to come and give free session when he does this for a living, right? So later on, guys, when I bring him on, right, I want everyone to give him your warmest welcome. But let me just quickly introduce him first, okay? So he's none other than a great friend of mine. His name is called Ray. All right, Ray Ao. He's the founder of this app or this website, which I believe some of you might have heard before, called Cardable, where you go and find fantastic credit card deals. Okay, if you don't, now you know. Okay, so you can go and look for great deals over there. And he also works at an asset management firm in Singapore. And this asset management firm, right? Later I'll let him introduce himself even further. But this asset management firm is not your traditional fiat currency. That means Singapore dollars, US dollars. They deal with digital assets. Okay, deal with digital assets. So I got him here to really share with you guys because that is what he lives and breathes right now. He does it on a day-to-day basis. Okay, so very quickly, without further ado, everybody, let's welcome Ray. All right,
Hi,
Ray.
Ray.
Hi, Ray. Can you hear me?
Hey, Pete. Nice. Thanks.
Okay.
Happy to be on your show. Finally.
Yeah, finally. Took you so long, huh?
But it happened.
Okay.
So glad to be
Yeah, it
here.
happens, right? Hey, guys, so please type in Ray if you are here to listen to Ray to teach you about blockchain and cryptocurrency. Okay, everyone type in Ray. Okay. Now, Ray, before we start, right, maybe just ask a bit of question, right? So how did you get into this whole blockchain and crypto scene? Like, how did it get started for you?
So it's quite interesting. I think Pete introduced earlier that I founded my own startup. It's called Cardable. And I think eventually, I handed over Cardable to my business partner to run. I've been in it for 5 years. And I was looking to go back to the corporate workforce because I wanted to learn more. I wanted to get mentored by people. And one of my angel investors who was investing in Cardable asked if I was interested to join his company. So I was quite intrigued. And when he told me that they were building, in his terms, a crypto bank, I was quite intrigued because I worked in a traditional bank before. I used to work for Merrill Lynch. And what is this crypto bank about? So I was really intrigued, and why someone like this, who's very senior in the finance industry, will join such a new venture. I got really intrigued and decided to join.
Wow, that's the part actually I never heard before. But Ray, that time when you wanted to jump onto a crypto bank, right? Do you have a slightest idea what it is, or what was how do you even have that leap of faith to do it?
I think at the moment of time it was that almost 2 years ago, 2018.
Mm,
So I think crypto was not as mainstream as today. And I was again really perplexed by how the word crypto and financial institutions come together, because normally this
mm,
crypto is known as decentralized while a bank is a
yep,
centralized entity. So how
yep,
how does this even work? So I think what was quite interesting is that we had a lot of very well-known um, well-known people that were working in this young startup. It was 8 months back then, 8 months old when I joined. Really, really well-known people in the industry. I think, hey, there's a chance, you have management consultants, you have bankers, you have board of directors that were
wow,
in the company. So I thought these are people actually trying to build a very serious project. And
mm,
that's one of the reasons why I joined.
okay, all right. So guys, I don't want to delay your learning any further. So Ray, let's start with the lesson that you have for us today. Okay,
Thank you. Thanks, Pete. So,
no
so
problem.
taking over today, um, today really basically is covering blockchain and crypto one-on-one. Again, the idea of today is not to teach you how to trade Bitcoin. And I'll cover more of that later. I think it's really important to understand the fundamentals of this technology. And thanks Pete for the introduction. A little bit more about me. I come from a background in banking and technology. So I studied tech back in NUS, and as mentioned earlier, I started my career in traditional banking tech. So started my career in Merrill Lynch, which is a wealth management firm. After that, I founded my own startup, which Pete introduced earlier, Cardable. And after that, I moved to this new crypto company, um, where I helped to build the early crypto trading platform. And right now, I'm working on product management here in this company. So the portfolios that I look after their client identity access module, and I look after their digital banking um, functions here in the company. So that's basically what I do. Signum as a company, we hold CMS license, which allows us to be an asset manager here in Singapore. And we, from FINMA, which is the Swiss authorities, we hold a full, I don't know the exact term, but we hold a full banking license over there in Switzerland. But really today I'm speaking in terms of my own personal capacity, not as a representative of the bank. Really very keen to teach you guys more about the crypto technologies and the underlying, uh, rather than about the crypto and the Bitcoin itself. And that's why we leap into today's agenda. First of all, I want to share with you the nature of economics and the inherent challenges that we have today. Um, and with these challenges, why did Bitcoin come about? What's the history behind it, and how does it address those challenges? Next, we'll step in a bit into the technicalities. What are the mechanics of blockchain? What are all these terms that you're hearing around DLT, blockchain, Bitcoin? Finally, now that you know the tech, I'd like to introduce you to real-world applications of this blockchain technology. So these are the expectations and outcome. First of all, again, I know Pete is a great investor, and many of you have great investment backgrounds. And that's why today I'd like to hold back a bit. It's not to teach you how to trade Bitcoin, not market advice. I would like to first equip you with the understanding on the fundamentals behind this new technology, why it exists, and what are the applications, and why is it so exciting. And I think once you have this fundamental knowledge, you can go out and make a better judgment on the trading front as well, or be it real world applications or business ideas. And as much as possible, this class I'll keep it within 1 hour. And based on my experience, we get a lot of questions, so we will leave some time for the questions. All right. So also seeking your understanding as well. 1 hour is a very short time to cover, economics, technology, financial system, and applications. So this course really meant as a primer, as a high level to get understanding. It's really meant for beginners. So I hope we have a great time of learning. So first of all, let's talk about the supply of money. So as we know today, right, fiat or traditional money currency is controlled by governments or central banks. And legal tender of money is really the promise of a government to pay you. And sometimes in reference to Bitcoin, when people talk about, hey, Bitcoin is nothing more than a piece of code, is not asset backed. In a way, legal tender is not asset backed as well. It's just backed by the promise of government to pay. Um, you know, since USD has moved away from the gold standard, it's not really backed by real hard assets, and therein lies the problem. And we'll talk more about that later. But we've seen problems with this as well, where the government can print as much money as they want. In 2008, the last major financial crisis, you had the Feds printing money and the government bailing out all the banks. You had big bank bailouts, and this is really at the people who suffer are mainly the working class. The rich bankers got bailed out. So really, as a person who worked hard and you earn your money, you have no control over inflation, and sometimes in some cases you have no control over who you can send money to. For example, there are sanctions, but if you are coming from for example, less banking equipped country like Kenya or Zimbabwe, you may have problems accessing the global financial system. Um, Also, how your data is handled. I think in terms of your data being with the central banks or being with the banks. So again, this is a very centralized system where the power is in the hands of the government. And we can see in some cases there are challenges, and the government has been also doing whatever they want in terms of money supply. Lastly, we do have a huge underlying and expensive financial system. Some of you may have heard of SWIFT. Some of you may have experienced when you transfer money from Singapore to Europe or US, it may be a T+2. And why is there T+2? Because we are relying on an underlying financial system that takes a cut or is not as fast as expected. And for example, why are credit cards charging a percentage of your transactions? So stuff like that. So I think this is the situation that we have today in terms of centralized money. And just to note, the existing system isn't all that bad. Just highlighting problems that some modern day innovators were thinking of solving. So just showing a more visualized example here. This is the Federal Reserve, and we can look at this is a chart of the total balance sheet of the Fed. And you can see since the data has been collected since around 2002, money supply, the balance sheet owned by the Fed has been around $1 trillion. And you see that gray bar, that first gray bar there is the financial crisis of 2008. After the financial crisis, they did massive quantitative QEs, right? Quantitative easing. I'm sure you have heard of that. And in the next 6 years, they essentially printed $3 trillion to support the economy. And after that, quite interesting, you see now in 2020 with our COVID crisis, the government effectively printed another $3 trillion in just 3 months. So effectively, what you can see here is runaway printing of money. I'm sure some of you may have heard the online memes going, "Brr, money printed by the government." Essentially, the government is printing a lot of money. And how does this affect you? Mainly through inflation. The $1 that you hold in your bank account is going to suddenly be a lot less valuable because of all these inflation. This has serious impact on the global financial system. But yet, central banks are printing money often unchecked. And there we go. So the birth of Bitcoin. So sometime around 2008, when all these global financial crises happening, the banks were getting bailed out. Some people quite unhappy with the government. A bit of history, you had this group of people called the cypherpunk movements. Basically, it's a bunch of people on online forums who advocate the widespread use of cryptography and privacy-enhancing technologies as a route to social and political change. So, it's a very colorful bunch of people who wish to keep the financial systems or out of the hands of the government. And how can we do that? So some of the questions they started to tackle is how can we build a global financial system that is scalable, censorship resistant, ensures privacy, it is secure, and is attack resistant. So I think it was really quite groundbreaking. In 2008, you can find it online. The Bitcoin white paper was published, and it was revolutionary in a way that it proposed a solution that actually worked, that solved a lot of the, or met a lot of the challenges above. So by no means Bitcoin or is the first digital currency. It's actually been created before. It's just that nobody has actually successfully tied all of these together to make it work in a coherent way. For example, if today I were to create a digital currency company, it's easy for governments to take down. How did this guy manage to do it? So it's quite interesting. And again, as a primer, because a lot of these terms are interchangeable, Bitcoin is the currency. Blockchain is the technology that enables Bitcoin. And they were given birth roughly together. Some of you may have heard of one of the so-called founders of Bitcoin, who's called Satoshi Nakamoto. And till today, we don't know who the actual person is. It's just an online term or his online nickname. But in order for them to create the currency Bitcoin, he had to create the technology blockchain, of which blockchain is a form of DLT, digital ledger technology. So if you do so with DLT or digital ledger technology, Bitcoin is enabled. So just a quick teaser on the terms that we are using today. And actually, without further ado, we're going in a bit to the technicalities. So we're going to stretch our technical brains a bit, but don't worry, I try to make this as beginner friendly as possible. Anyone with any kind of with no technical background can understand this as well. So some of the questions that we have here is that, in order to design a global currency, if you are architect of a global currency, some questions that we keep in mind for later: how do we control the supply of money? How do we prevent, runaway printing of Bitcoin and other challenges as well? So imagine you're a designer of a currency, and we have a case study later which we'll work on. But next, just a recap, brief history of money. So at the start, we have barter trading, and I think it's quite clear, you trade your cow for someone's chicken. And then that was in the early days, prehistoric times. And then we moved to commodity money, where we trade in terms of intrinsic value. So gold, you use gold coins, physical gold coins, where it held a certain value. Then we move to the modern system, which is fiat money, legal tender without intrinsic value. So earlier I mentioned USD now is unpacked by all the gold in Fort Knox. So that's legal tender, which is what we have today. And, for the future, perhaps digital currencies as cryptocurrencies, where we shift from physical money to digital money. And not only that, of course, we have digital money in the banking system today, but cryptocurrencies as peer-to-peer transfers, being your own bank or processing your own transactions on a decentralized way outside the reach of centralized parties. And here's the fun part, stepping in a bit into the technicalities behind it. So what is a blockchain? Essentially, it's called a blockchain because it is, so think of a block as a packet of data. So how do you connect multiple packets of data together, and how I'm going to solve some problems about that. And essentially, it's of course, a bit confusing here, but I'll just quickly point out some of the things. If you can quickly see in this block number 1, you see the block hash here, 71385. It is linked to the previous block here, 713. So each block is cryptographically linked to the previous one. And essentially, this is one of the characteristics of a blockchain, that I create packets of data which are linked to each other by cryptographic secrets, such that if I modify one block, if I go into a block and modify any packet of data, the links will be broken. So blockchain allows for tamper-proof construction of a database. In the most simplistic terms, you can look at DLT, digital ledger technology, at nothing more than a database, fields, online fields where you can store information. And to make it tamper-proof, people built the blockchain. If you were to modify a single block, the effects, it will cascade down in terms of flagging off that there is tampering that happened to the first block. So that is why the blockchain is important. So an analogy that I wanted to share with everyone is sort of a transparent safe. So contrary to popular belief that, I think in the earlier days, even now, Bitcoin or cryptocurrencies have a bit of a dubious reputation where, they facilitate drug trade or other dubious stuff because there's complete anonymity. But in actual sense, blockchain or the way Bitcoin is designed is that each block that you see here is published on the internet. It's published on the nodes, which we'll talk about later. But basically, all these are available online for searching. In each block, we will know the data inside. So Pete can go today and go online and query a particular block and find all the information inside. However, only the person with the private key. So the private key, if you are the owner of the box in a simplistic way, you need a key to open it. And so that's why Bitcoin is, in a way, very, very transparent, tamper-proof, and only the person with access is able to unlock it. And if you were to tamper it, the entire history of the ledger will know it. So how does this cryptography, again, cryptocurrencies, how does the crypto part work? And when I kept mentioning tamper-proof, how does it work in essence? So on the technical side of things, Bitcoin uses this thing called the SHA-256 hash. Cryptography happens all over the web, including this online stream that you see. Any information that is passed online, many of them are cryptographically signed. Even if you look at your browser, you see the small lock sign at the top left beside your URL. That also shows that it is cryptographically secure in a certain way. So you can see this in action here. Using the SHA-256 hash, if I were to put in the word Bitcoin without capital B, the output will be this long string of numbers. If you were just to make a small change from a small b to a capital B, you can see the entire output is radically changed. So this means that through a cryptographic hash, you can sort of make cryptocurrency tamper-proof. Any small change, in other words, any small change, any way you tamper it will result in far-reaching effects on the output. So in a very, very nutshell, in a very basic sense, this is how cryptography helps to secure the blockchain in being tamper-proof and proving that it works. Now, excuse me. So now let's talk about nodes. So we've been hearing stuff about nodes as well. So let's step back a bit. Let's now use the reference that your ledger. So earlier I was talking about ledger. Your digital ledger, you can see it as, in a way, like an Excel sheet. An Excel sheet is also a digital ledger where you have your columns and you have your cells. And the way you can think about it in reference to Bitcoin is that each cell has a balance. Of course, Pete's name wouldn't be there, but Pete has an address. Maybe Pete's address is 1456A, and nobody knows that 1456A, the address, the PO box belongs to Pete, but Pete knows that he's the owner of 156A address. So imagine that on the ledger, on your Excel sheet, there's so many rows. I'll try not to repeat. You can always text me your private key. So imagine there's all the rows, and in it all the rows that we spoke about earlier are tamper-proof because each row in the cell is linked to the next one by cryptography. If Pete has a balance of 5, or Pete's address has a balance of 5 Bitcoins, and if I were to simply change the cell from 5 to 6, just imagine that there's a cascade effect where all the cryptography cryptography will detect that there's a tamper with that cell. So in blockchain, we do not modify a cell. If we want to modify Pete's balance, basically we add a new cell at the bottom. So new cells are always being added. Just imagine the new cell will say Pete has now balance of 4. Pete has transferred 2 to somebody else. So this is how the blockchain looks like, that it always stacks. We do not modify existing cells because, as mentioned earlier, it is not meant to be modified. We add things to the chain. And I cannot modify. The only way to modify is to add. We can't change existing cells. So the whole piece of document is called a digital ledger. It's a ledger of who owns what, basically. No different from a ledger at your mom and pop shop. Now, how then do we make it decentralized? So we solved the first issue in a way that, hey, we have a tamper-proof piece of document, and I can put it on Pete's computer and Pete can modify it however you want. But in this case, if you want it to be a global currency, and we need to share it among 100,000 users across the world, how can we make sure that Pete doesn't maliciously give himself more Bitcoin? In other words, we need to solve the problem of centralization. We do not want a single party to maliciously update his records and to the detriment of everybody. So now we're going to talk about decentralization, and this is where nodes come in. Essentially, we take this ledger, again, this Excel document, this super secure Excel document, if you will, that is tamper-proof in itself, unless, of course, Pete, as the only owner of this sheet, decides to modify it. Now, to make it globally for usage, we take this piece of document and store it across 1 million computers across the world. So while Pete may then modify his own copy, the other 999,000 computers around the world will need to agree with Pete's modification in order for it to become true. So this is where the nodes come in. So a node is a device, like a computer, that contains a full copy of the transaction history, sorry for the typo, of a blockchain. So imagine now I took this this Excel document and I put it across 1 million computers. What do these nodes do? These nodes basically check each block that is valid or not. So as mentioned earlier, the blockchain, we keep adding new rows to it. Every time there's a new row being added there, it goes to all these nodes, 1 million computers across the world, and all these million computers across the world, the majority of them have to accept it for it to become true. So now can you imagine if I want to hack the blockchain? I need to actually have the majority of the million computers across the world to agree with my hack, which is impossible because nobody will want to break Bitcoin. The moment I give myself more cryptocurrencies than needed, the whole system fails. So this makes it so attack resistant. So in a way, in a nutshell, this is storing your digital ledger across many computers across the world, makes it decentralized. Which makes it hack resistant, and it also makes it extremely resilient. Imagine if the US government says, I will now ban Bitcoin, and anybody who holds a Bitcoin computer is now criminal. and the entire US goes dark, you still have 700,000 computers across the world that ensures the Bitcoin system is alive. So you can see how extremely resilient this network is. Even if your computers are offline, you will still contain a copy of the node. So this is interesting. For once, we know governments have gone to war before for the right to protect their currency. The right for you to issue and print money as a government is sacred, and they will do anything it can take to take a competing system down. So that's why the founders of Bitcoin created a system that was takedown resistant. In other words, by storing it in 1 million computers or more across the world. And so here are some of the terms now. I mean, we've heard a lot of terms floating around. First of all, a characteristic of blockchain technology that is transparent. Everything can be traced. Nothing can be hidden. Because the books are open, everybody can see what each cell contains. It is impossible to tamper it. And later we talk about real-world applications, but you can see transparency. The characteristics of transparency is good for stuff like supply chain management. I will know Louis Vuitton bag is real or not because it is transparent. Secondly, decentralized. That no central authority controls the network. So no malicious player can take over the network and use it for their own pure benefit. Next is distributed. So each and every node plays a part in maintaining the network. That power is spread across multiple players. It's distributed across geography, across players, across systems. So also this makes it takedown resistant. Finally, another point that I would like to point out is Bitcoin is immutable. Once transmitted to the blockchain, no parts of the transaction can be changed or altered. Again, I can see some of you probably are thinking, hey, this may not be a good thing because it sounds scary if I make an accidental Bitcoin transaction to somebody, I'm not going to be able to get that back. And that is true. Bitcoin is immutable and irreversible. If you make a wrong transaction to somebody, it's gone. It's gone to the person. Of course, that might sound bad, but it's designed this way because it corrects some issues on the current system as well. The current banking system, it is reversible. I guess in many cases, I'm sure some of you have seen a news article recently that Citibank made an error payment from Revlon to somebody else. And you can go to the court system for that. You can sue somebody. In some cases, the bank can simply reverse the transaction. But one of the key characteristics of blockchain is once it's written, it is sacred. It can't be written again. Unless, of course, the other person who somehow received the money has decided to transfer back to me. So the system cannot be tampered with. Essentially, that is another characteristics of what immutability gives. Once written, cannot be unwritten. Okay, so I hope that I gave a good primer or teaser to all these key terms floating around. What is a digital ledger technology? And why is there a need for blockchain? And what are the technologies that support blockchain? Finally, we spoke about some of the characteristics behind it. Now, going back to the topic of finance, how can I take all these technologies and design a currency? So some of the questions we want to answer here, right? So blockchain characteristics that you learned earlier in action in terms of designing a financial system. Number one, how can we make a financial system resistant to control by any centralized party? We don't want this to be under control of DBS or US government or North Korea government. We want this to be a global system that is truly available to all. What characteristics do we use? Next, how do you prevent people from altering the ledger maliciously by giving themselves more money? Next, how do you keep people honest? Again, earlier I mentioned this ledger is stored across 1 million computers. How do you keep people honest? And next, how do you prevent unlimited printing of money? So putting some of those technical jargon, or actually those words I'm sure you heard all the time, into play here in terms of designing a currency. In this case, Bitcoin, which is the granddaddy, the first currency out of blockchain. So you can see a distributed ledger, spreading it across multiple nodes or computers allows it to be, resistant to control by a single party. Next, blockchain technology. By chaining the blocks together, I prevent people from altering it. You can only add new information to it, but you can't alter existing ones. And any new information, again, as I mentioned earlier, will need to be checked by all nodes and approved by all nodes. Next is, I won't go too deep into it because this is another topic by itself, mining and verification. Again, just now I mentioned we had to, Bitcoin, you have to add new entries, new blocks to the chains. How do you approve a new block to be added to a chain? This is done by people who verify, people who mine. So a miner is a person who also has a node. The difference is that the miners verify that whatever, for example, Pete made a transaction of 2 Bitcoin from Pete to Ray, and he wants to add a new row to the blockchain. Somebody has to check the work, that it is cryptographically sound, and it is approved for adding to the chain. So this is where mining comes in, where people solve computational problems in order to add a new row. And why do you need to solve a computational problem? I think that is also a very interesting design, very interesting way that Satoshi and team solve a certain problem. So you cannot, in other words, what we call it anyhow, suka, add a new row inside, because you require to expend effort to verify. And if you're spending computing power, for example, let's say you spend 10 hours of computing time to add a new block, you better make sure that your 10 hours of computing time is worth the effort. You do not just want to add a bad block in, which is not accepted by other computers and is thrown out. So you want to make sure you are doing good work. So again, I'm not going too deep into mining because today's session is not about that. But there are parties in the node system that does the work to ensure all those transactions that are flying around are double checked. Finally, scarcity. Let's talk about scarcity. Earlier, we spoke about the Fed printing unlimited money, and we do not want that to happen for Bitcoin, for example. So how do you prevent that? Bitcoin is programmed. It's programmed to have a maximum supply of 21 million Bitcoins. And over time, so how are new Bitcoins created? New Bitcoins are created when the miners add new blocks. Earlier I mentioned about adding new blocks. When miners add new blocks, new Bitcoins are created as a reward for the miners. But essentially, as you see a supply curve, right? Where Bitcoin gets more and more scarce over time. So I think currently probably, I can't remember the exact number, something like 18 million Bitcoins are already in circulation. So there's only 3 million Bitcoins up for grabs. So at the start, a lot of Bitcoins are produced, and over time, the supply dwindles. In terms of economics, what does this happen? If your supply dwindles, your value goes up because of scarcity. So interesting again, you can see the creators of Bitcoin purposely program Bitcoin to have self-sustaining scarcity. You can't change the code because I spoke about immutability. And it's interesting. So again, be it Bitcoin or any other currency or any other application that you want to create with Bitcoin, it's just pieces of code. You can program it. You can design your own currency, in other words. All right, so with the last 20 minutes, I understand it's a bit technical earlier, but now we're going to the more fun part. Now that I've hopefully equipped you with a basic knowledge of all these Bitcoin terms that are floating around. I hope now you've gotten more familiar with me repeating immutability, blockchain, cryptography, scarcity, all these terms. How can you leverage on this to build your own idea, to build your own technology? And I think that's where it starts getting interesting. Most of us only heard of Bitcoin, but what else can we design stuff with? So here we go. So how can you, with blockchain, what can you do? So I think first and foremost, the most famous examples are currency, right? Bitcoin is a digital currency. Currencies are functions as a medium of exchange. As a teaser for those of you who have heard it, we have stable coins. So stable coins are the digital version of the USD. So again, taking certain of the attributes that if you pick and choose several attributes from what you heard earlier, you can design a currency around this technology, and it's a fantastic application because of censorship resistance, no centralized party, immutable, limited supply, very, very great characteristics to make a good currency. The next application of blockchain, another category, is utility tokens. So, asset associated with specific application scenario. Let me give you an example. You see over there, you have Brave. So I don't work for Brave, but Brave is a new browser. If you heard of Chrome, Firefox, Brave is one of the new ones. And they're quite interesting because Brave pays you tokens for watching advertisements. If you're on Chrome anyway, you're watching a lot of Google advertisements, and that's how Google makes money. What Brave does is they feed the same advertisements to you, but Brave gives you a cut in terms of Brave tokens. And Brave tokens can be traded for real money. In the real example of utility tokens, maybe you go to an arcade and you get a token. In other words, that arcade token is not meant as currency, but is meant, as a utility. So you can see some of the usage here. Can Louis Vuitton create a Louis Vuitton token for loyalty purposes to entice you to come back? So some interesting use cases there. Next, we have security, which also is a very interesting use case. So by security, I mean tokenized assets. One of the use case may be property, may be a good example. If today I want to buy a property, I may have to, as a single buyer or joint buyer, fork out $1 million to buy a property. What about property investment vehicles? You may need to be an AI accredited investor here in Singapore. What happens if I can fractionalize my property? I have a property that I like. I can break it down into property tokens. Like, let's say I buy a property at, let's say, 1 Strathmore. I can create a Strathmore token, offer it online. People can buy pieces of the property. Maybe you break it out into 1 million pieces, 1 million tokens. And according to how many tokens you own, you can earn a percentage of the yield. And you can freely trade the tokens online. So other examples of security are, shares. Company shares is another great example. And we do see that happening today. Many advances are coming, I think SGX and a lot of other exchanges are looking at digitalization or tokenization of their real assets. Just think of it, another use case, right? If today I want to raise capital, let's say Cuttable wants to IPO, I have to file many, many documents and I have to, list on the SGX. One attribute of cryptocurrencies or one attribute of blockchains that I can use is I can list a Cuttable token on a neutral platform online, and it can be instantly traded in many, many markets so long as a person has internet access. For example, but in general, security tokens are highly regulated. Because as you can imagine, if I want to trade a property in Singapore, the government is not going to let me freely trade it online. There are a lot of regulations to go around, But again, that's why it's a very exciting space as well. Next, we have our platform tokens. So I'm sure many of you have heard of Ethereum, Tron. Ethereum is not a cryptocurrency per se. It is more of a platform token. So Ethereum was designed such that people can build their own tokens on top of Ethereum. If you heard of the term ERC20, so Ethereum has a few standards. Maybe I can use Tron as another good example. So Tron is quite famous for casino apps. People build casino apps on top of Tron. It's like a library. It's like a programming language that people can easily build on top. And if I want to make transactions on my casino app, people will use the Tron token. But I'm sure we can leave more of that for Q&A. Finally, we have asset back. So, fantastic. Earlier we spoke about asset backing stuff. There are cryptocurrencies today that are asset backed. You can buy Paxco as an example. You can buy a Paxco token, and each of them are backed by a piece of gold somewhere. So they are gold-backed cryptocurrencies. Again, why you ask me, why don't I just go and buy a SPDR somewhere? Because cryptocurrencies are freely tradable in many, many exchanges online. I think within half an hour, I can easily buy a piece of gold without going through, very hefty existing traditional processes in setting up an account. Yep. So almost to the end. So here are some other real-world applications that I'd like to show you. Yeah. One is you can see blockchain on food, blockchain on judicial systems, and I'm sure a lot of you have heard of the digital renminbi. So this is the central banking digital currencies that are coming up, that a lot of central banks around the world, including Singapore, are actively exploring central banking currency. And actually, the next part is the Q&A, but maybe the final point I'd like to cover is, because I find it really interesting, is central banking currencies. Because this will potentially affect all of us, whether you want to own a Bitcoin or not, for example. So let me give you an example of a central banking currency. The key one is the digital renminbi. And I think some of you may have heard also of the Libra coin. So I think it's worth talking about the Libra coin. Facebook wanted to launch their own cryptocurrencies sometime last year. It's called Libra. And that was a pretty interesting project. So Facebook's token was designed to be asset-backed. It's not like Bitcoin where there's no asset. The Facebook Libra token was meant to be packed to a basket of currencies. So that for each Libra token you own, there will be equivalent value of USD, Swiss francs, Singapore dollars, locked in an account somewhere. So it is backed by actual currency. And by designing it this way, it means that there's a lot less fluctuations of your cryptocurrencies. Again, that's the beauty of blockchain or cryptocurrencies, because as I've shown you so far, you can design it in many ways possible to solve problems. So one of the problems Libra wanted to solve is cross-border payments. And for us here in Singapore, we don't face much of an issue because we have great access to the banking system. But if you talk about Western Union, so I think on average, the cost of cross-border payments, I think it's quite high. It's about 7 to 12% on average. So if every dollar that someone moves from one part of the world to another, on average, people are losing about 7 to 12% of the transactions. They're going to financial players. And Libra was intended to reduce that cost drastically. If someone from Kenya or someone from Singapore, for example, wanted to send money back to Philippines or Kenya, instead of jumping through the hoops with so many banks, going to your e-banking platform and keying all the information through a widely used platform like Facebook, you could easily transfer money and at a much, much lower cost, because with new technologies, the cross-border payments are a lot cheaper. So potentially this will impact a lot of people from across the world. Intentions-wise, it sounds pretty interesting, other than the fact that people are saying Facebook is already have too much control over the systems. So if you think about it, so some people are saying this again are online stories that you may get interested in. Some people are saying China saw this as quite scary, as a threat to their financial system. Because China has a lot of people, right? 1.2 plus billion people. Not many entities has more people than China. And actually one such entity, if you think about it, is Facebook with about 3 billion people. So we wouldn't want, in cases of many governments, including European and American governments, definitely that block Libra, they do not want a serious challenger like that with 3 billion users to take control of the world financial system. So I think some people are talking about China in their case with the digital renminbi. So what's interesting about that? Some people say digital currencies are not new. If I want to transfer money from a WeChat account to another, I want to send renminbi from one account to another. Again, I'm not a China expert here. It's just a click of a button. Same thing for DBS PayLah. The difference here is that if I transfer $1 from myself to Pete through PayLah, MAS does not know. The government does not know because it is settled between me and Pete within DBS. Now, central banking currencies, as I mentioned earlier, digital ledger means that every transaction is written onto the chain. Potentially with digital currencies, it means that if I move money from myself to Pete, I need to write on the ledger, and the ledger is written with the central bank. Because with simple pieces of code, they can. So one thing is that governments, again, depends on how you design your cryptocurrency. You can design it in many, many ways. But if, for example, China decides to build a centralized currency, they want to do it blockchain, but make it centralized. Effectively, they will know simple money transfers from person A to B. The central government will know. They may also know all the money that's coming to your account. This may have far-reaching impact. For example, they can tax everybody with a single click of the button. Through algorithms at the back, I will know your bank account, I'll know who's paying you what. So instantly, algorithms can handle that. I can give you interest based on. So if the government wants to give payouts, they can just click a button and it will pay out instantly. There's no need for me to send you letters and find out which bank you bank with. So, for example, the Singh government is actually pretty good at that. I think in terms of giving the SG payouts is fast. But for many countries, it's not so fast. So central banking currencies really allow governments to know to control many aspects. Again, it depends how you design it. But potentially they can know every single transaction you make. They can potentially know all the data that's behind it, what you've been spending at the casino, at the nightclubs, or how many times you went to NTUC, for example. They can also do things like instant tax. They can reduce corruption. So I think just food for thought again that, in terms of governments dabbling with central banking currencies, where does it go? How does it impact you? And, again, what's so exciting about all these technologies that will impact you? And I think with that, I will pass it back to Pengi, and then Pete, and then we can leave it for Q&A.
All right. Okay, guys, I'm back. Wow. It's so much that Ray had to cram into 1 hour. Really, thanks Ray for doing such a great job, right? Okay, so guys, right now Q&A session. I think we have some questions up, so let me just go quickly. So I think Yoksan has a question that I think many investors, including myself, right, always think about is that, Ray, from your perspective as someone in the crypto space, digital assets, right, is there a way that or do you see different ways that people value Bitcoin or any type of cryptocurrency in that sense? Is it through cost of mining or widespread adoption, or what do they use?
Actually, that's a fantastic question. But before I say that, I just got to, for disclaimer purposes, not representing my company. To be very careful about giving investment advice. But
Yeah.
I think this question is quite interesting from a mechanic level. That I think first of all, I like to point out that Bitcoin is not asset backed. So some people again say I'm hesitant about Bitcoin because it's not asset backed. But same thing as many currencies across the world, we are no
As
longer
fiat,
asset
right?
backed currencies. So
Yeah.
a lot of it is value in the eye of the beholder. So first and foremost, I guess. Second way to look at it is stock to flow model. Some of you investors may have heard of the gold stock to flow model. Again, gold is a famous one. How much supply of gold that we have in the market versus how much gold is being mined and the demand behind it. So as with any product is supply demand. So some of the gold experts, you can Google online. People have been studying gold, saying that Bitcoin has a very very good stock to flow model, very, very similar to gold in terms of scarcity, the amount that's being mined. So some people are talking about Bitcoin having a very similar stock to flow model as gold, of the price going up. That's another way to look at it. Lastly is cost. You mentioned cost of mining. Actually, that's an interesting one. It does affect the cost of Bitcoin indirectly because the miners, freshly minted Bitcoin goes to the miners. As I mentioned earlier, the system pays the miners for verifying the system and maintaining integrity. So miners over time do hold a good holding of Bitcoins. And to pay for their equipment, to pay for their electricity, they release Bitcoin into the market. And as you can see, that affects prices as well. But I think it's rather indirect, because the beauty of economics is that if Bitcoin prices drop, the miners will go, the inefficient ones will go bust, and the prices will regulate itself. So it's sort of self-regulating. So I think while it's indirectly interesting, I would count that up for now. Adoption of Bitcoin is interesting. I think that's another major factor. We've seen that the price of Bitcoin is heavily affected by many macro events as well. For example, if Trump announces something, right, sometimes it moves the market.
Yes.
And we start seeing more corporates announcing partnerships or stuff to do with cryptocurrencies. It may move the market. However, again, just like any other asset, because Bitcoin is increasing in liquidity, so the market cap is going up. As the market cap goes up, you tend to have less shocks, to the system, which is good for the health of good for volatility. Less volatility in the Bitcoin that we'll see over time as liquidity goes up.
Yeah. Hey, thanks, Ray. I think one key thing that about Bitcoin, right? I think it's built in the system, right? Is that as it ages, it becomes more and more stable, right? As there are more and more Bitcoin being produced, and then the adoption increases, then that's where the stability of the currency come from. Because we also cannot accept the fact, right? If let's say you have $1 million in your bank account, then tomorrow it's going to worth like half of that, right? That will be like almost unacceptable to most people, right? And then we see a lot of that in the early stage of cryptocurrency, especially Bitcoin. But now I think it's less so. In fact, the volatility, if I'm tracking it correctly, it did reduce over the last 3 years. Yeah. Okay. I think there's one trend of questions basically is asking, if everybody can create their own currency, right? Then how is it different from each other, right? Can I just go and create a Bitcoin and then I start transacting? What's your take on this? Like, yeah. So does it make cryptocurrency fraudulent, illegitimate?
I think it's quite interesting again because we can look at this from many angles. But what is the process of creating your own cryptocurrency? How difficult it is? So in a nutshell, it's not difficult. Again, we mentioned Ethereum. You may not need to build your own cryptocurrency from scratch. There are many platforms that help you to do quick builds. But nonetheless, you need experienced developers to do it. There's a scarcity in the market for coding talents in this sphere. But to answer the question directly, you can easily create a Bitcoin, not a problem. But then it goes into economics. How do you distribute it? Which exchanges do you list on? again, if you've heard of Binance, Kraken, are you able to list on them? Is there a distribution channel? What is your marketing? Second, there's a lot of mechanics of gamification behind cryptocurrencies as well. That's why earlier when I mentioned to you the Brave browser, utility tokens, asset tokens, people see tangible values in these kind of things. So I guess, from economic standpoint, I think markets do reward useful projects as well. Sure, you can create your own Bitcoin, but whether you'll fly or not is a whole different matter. And I feel the market does try to regulate that.
I fully agree. Right, I think if I create a Bitcoin, I don't think anybody will want to use it, right? Because it's not something that people believe in. Okay, so you can definitely create your own cryptocurrency. Actually, if you want to create your own fiat currency, it's also possible, right? You can go and create your own paper money, right? But the thing is, if nobody uses it, nobody values it, the perceived value is zero, right?
Correct.
So with that said, right, I think that's a very long statement, but basically the last sentence lah. Do you see a time when cryptocurrency or Bitcoin replaces the fiat system? So what are your views? How can crypto Bitcoin either replace fiat currency, or do you see them fighting to the death, or what?
Actually, that's a tough question. I don't have the answer. In terms of personal views, I think related to Bitcoin price, as it goes more mainstream, Bitcoin now is probably $300 billion in market cap. I can't remember the exact amount, but it's a tiny fraction of gold, and it's a tiny fraction of many asset classes.
Very, very small.
And I think in terms of increasing adoption beyond currency, you will see we think that Bitcoin will be more prevalent. Also, some people see Bitcoin as the gateway drug to many other altcoins. So I think just now we had a viewer mentioning altcoins. Basically, altcoins are the broad basket of terms for tokens that are not in the top three, not Bitcoin, not Ethereum, for example. So, for example, give a very outlandish example. The Singh government has decided to move property transactions online, and you need Singh government.
That would be great.
Yeah, it sounds great, and I think another key characteristics of digital tech or any sort of software is we hope for it to be what we call interoperable. So a piece of code with another piece of code with similar technology, we can easily trade it. So hopefully, as even if we get digital Sing dollars or digital renminbi, some people are saying it will kill Bitcoin. I think more likely is we have more digital adoption. Again, one example is digital KrisFlyer, for example. Now you may easily take not now, but
But nobody wants KrisFlyer now.
That's true.
It's worthless.
I think the nice thing is the trading mechanics. Yeah, you're right. Like KrisFlyer miles drop in price, and you can freely trade them for NTUC miles with someone who wants
you can actually buy and sell KrisFlyer points. Yeah.
So I think one beauty is interoperability, where tokens tend to be easier to trade with other tokens. Yeah.
Okay.
I answered that properly.
Yeah. I think okay. So there are also a few questions talking about digital renminbi or digital yuan that you mentioned, right? So I guess the question is that with the decentralized cryptocurrency that we have right now, be it Ethereum or the platform tokens platform tokens like Ethereum or Bitcoin digital currency, right? How would the government producing digital yuan or maybe even digital US dollars, right? How do you see that affecting the decentralized cryptocurrency, right? Is that a good thing or actually like what you say? Because the last part you mentioned like a bit like doom and gloom, right? Wow, they will track everything you do. They can text you. They can do this, do that. So how do you see that happening? potential happening, right?
I think my personal views is that there's a lot of this part is where it's interesting because there's a lot of geopolitics. As we know, China many times they prefer closed systems. They want to leverage on AI, but probably not, probably for what they call public good, or in terms of. So I think for digital renminbi, a lot of it may be to collect data. A lot of it may be to, in other words, I think as we've seen with a lot of China's systems or platforms, they may adopt their own and eventually push out competitors that are not aligned with their system. That may happen. In that case, Bitcoin may actually, it's hard to speculate, but if China decides to do something like, hey, I'm going to create my own system, all other systems are banned, which we have seen before in the past, then maybe cryptocurrencies will simply not be used in China. Maybe. And don't forget, with cryptocurrencies, you can program it however you want. The China government can issue a cryptocurrency version 3, easily, and update the rules for cross-border movement or trading of renminbi versus Bitcoin. They can do a lot of controls, and it's flexible. In other words, I don't have the answer for China. I can just look at the history in terms of how they prefer centralized own style systems. I think globally, it is a lot more free and easy. I think globally, people do embrace innovation a lot more. I think people are more wary of government printing of money. So on the ground, I do hear a lot more people being open to such alternate currencies, from the fiat system because of government behavior. That's why there's a lot of interest nowadays. So I think it may go up on that aspect.
Okay. Okay, let me see if there's any other question. So Ray, I think the as an investor, I think I have to ask you this, but guys, do take note, this Ray's own opinion. He doesn't represent anybody in this case, but in terms of cryptocurrencies, right? Of course, investors we're always looking for the next asset to put our money to work, right? To grow. So maybe just share, right? Like, why out of so many cryptocurrencies? Now we know Bitcoin was the starting coin, the starting cryptocurrency, but it seems like Bitcoin is also currently the highest market cap and garnering the most attention. Why is that the case? How is Bitcoin different from other form of alternate coins?
I think as you mentioned, mainly because of the history. Is the granddaddy, is the first.
Right.
And Bitcoin actually has a lot of problems with it. Again, it is in some ways we could see as old technology. It is slow. It is a fraction of the speed of Visa, for example. I can't even remember the exact numbers, but Visa can transact 24,000 transactions per second TPS. Bitcoin is a tiny fraction, and Bitcoin can be expensive because the system is slow. So sometimes it's not the best use case as currency. I think that's why, as one of our readers mentioned online, Bitcoin is more likened to digital gold because you don't take gold bars and pass to each other. You use currency. Whereas many of the new altcoins, including Ethereum, is a lot
This
faster.
Is my gold bar.
Hey, yeah.
This is the gold bar. This is the gold bar.
Are you giving it away?
Okay, sorry. No. I can buy a new one for you guys, but this is not going to be given away. Okay.
Store it securely.
Yeah.
So, sorry, where
were we? So sorry.
Currency.
Yeah.
So why
it's more like a whole of value in this case, right?
Sorry?
It's more like a whole of value in this case rather than a payment gateway, right?
Correct. Another reason why, is because we talk about trading pairs again. Basically, if you want to buy many things in the world are denominated by USD, right? Again, many things on the crypto trading platforms are denominated by BTC or ETH, Bitcoin or Ethereum. And that's the reason why many people at the start, they hold Bitcoin or Ethereum so they can trade other coins. It's like the two major hold of values. And liquidity, again, another rule, liquidity tends to attract liquidity. Because Bitcoin is the most liquid, it attracts more liquidity. So, it's quite natural there.
Yeah, liquidity really matters, but right now Bitcoin is definitely not your best payment gateway, right? If you're going to tap your credit card, it get transacted within seconds. But if now, let's say Ray were to transfer his Bitcoin to me, which I'll gladly accept, it will take about, I think, 30 seconds or 30 minutes actually. I think it will take about 30 minutes to clear, right? So yeah, okay. Okay, so I think we were coming about to the end. Once again, I want to thank Ray for spending time with us to share with us really the ins and out, but really summarize it in a very layman fashion to share with everybody. All right, Ray, thank you so much for spending time and teaching my community or everyone here. Now, for those of you who want to find out more about blockchain, about cryptocurrency, right? I'm going to do my best to bring on more guests, maybe even invite Ray back to do a follow-up session on this. But the key thing is this, guys. To get started, the easiest way is for you to, just buy a little bit. Just buy a fraction. Like you don't have to buy one Bitcoin, Like right now, one Bitcoin is like $11,700, right? You don't have to buy one Bitcoin. You can just buy like a fraction of a Bitcoin just to play with it, just to try out. Right? Buy $100, buy $200, just to see how it works, right? Buy and sell it, right? Put it into a cold wallet like this, just to have a sense like what exactly is this thing about, right? To give yourself a chance to understand it better. Because I know there's so many of you out there with like, may have like different impression about cryptocurrency, and you might, cut it off and say, oh, no, this is a fraud, right? So as an investor, the key thing is this: always keep your mind open. Okay. So if you want to like, just own a little bit of Bitcoin and then see how it works, I would strongly encourage that. Okay. And the platform I use is actually Gemini. And actually I got that platform introduced by Ray actually. Right. So guys, once again, thank you for being with us. Awesome session. It's been 1 hour and almost 15 minutes. Okay. So Ray, thank you so much. And that's the end of the session. We'll do more. Guys, if you all would like for Ray to come back, all right, guys, type in Ray. All right, type in thank you, Ray. Okay, and I'll do my best to invite Ray back again. Okay. All right. Thank you so much, everyone. Ray, have any last words for the audience?
No, I hope. I hope you guys enjoyed the session as much as I enjoyed sharing my knowledge with you. Apologies if it was a bit too technical, but I really hope it gave you a flavor of the technologies behind it, and can also continue on your learning journey. I think what Pete suggested was great. Continue learning, and I think it's a good start.
Yeah, exactly. Okay, so guys, for those of you who want to know more about how to buy Bitcoin through Gemini, how to store it in the Ledger wallet, I actually did a few videos on my Facebook group. You guys can go there and have a look. All right, the Invest with Pete Facebook group. All these are free knowledge. I just posted a link there. Just full disclosure, this is a referral link that I have from Gemini, but at no cost to you. If you were to buy $100 of Bitcoin right now, they actually give you another $10 more. So why not 10% discount? Okay. If not, that's all we have, everybody. So I hope to see everyone again. Actually, this week, all right, in the next session, I'm going to bring on, all right, we're going to go back this time around, all right, from blockchain, cryptocurrency, we're going to move back to properties, all right. So this Thursday, I'm going to bring on another property expert to share with you about how do you sell your property properly. Okay, but I'll just leave that at this moment. If you all want, just join me on Thursday, and I'll see you all in the next session. Bye-bye.